Melbourne's, to a certain extent, has done that, not as much. But what's important about Melbourne, it's the cheaper areas that are still really strong. So people are obviously chasing affordability in Melbourne. So it's like the suburbs of Melton, the suburbs of Hume up in the north, Casey down in the far south east, Wyndham City heading down towards Geelong. The suburbs there still got really strong buyer numbers. And, it's quite evident that from those numbers that, and there's also an uplift in people buying apartments in certain areas. So people chasing affordability. So that will always drive people to look outside of Melbourne to places like, Bendigo and Ballarat and Geelong, the Latrobe Valley towns. And something I think is interesting about the next few years for those places, particularly the big three, Geelong, Ballarat and Bendigo, is that they're going to be holding the Commonwealth Games in 4 years' time. And that's going to has to precipitate a big infrastructure spend. They're going to have to upgrade their sports facilities. They're going to have to upgrade the transport links. Hospitality sector will be investing. It's a really big event, and it's never been held in regions before. It's always been held in really big cities. So this is, I think, quite momentous for continuing the momentum that we've been seeing in regional Victoria. So I think that prospects of continuing to produce growth are going to be good. I think, you're going to get a better rental return for a start. The cheaper you buy, generally the yields are higher. But there's no evidence that cheap real estate has inferior growth. And because I've been working with a lot of these numbers the last few days, in Melbourne, some of the long-term growth rates, if you've got a suburb that's averaged, say, 7% a year for the last 10 years, that means it's doubled in 10 years. That's a pretty good growth rate. So if you've got 8 or 9 or 10% per year, that's an excellent growth rate. So Frankston North, which is a pretty humble suburb down in the Frankston area of Melbourne, its long-term growth rate is 8.5% a year. Williams Landing down around Wyndham is 9% a year. Clyde, which is down the Casey, way down the southwest, it's 10% a year over the last 10 years. And you can go through the cheaper areas of Sydney, out around Blacktown and Penrith. They're all 8-9% per year, 10-year growth averages.
Yeah.
And you can, I'm just looking at the numbers for Hobart, the cheapest, most downmarket suburbs in Hobart, like Risdon Vale and Chigwell, where you would be afraid to walk at night, their long-term growth rates, 10-year growth averages are sort of 9.5% per year for the last 10 years. So, there's lots of data like that around that you can respond to people and say, we're not going to get good growth. Well, the actual statistics disagree with that. What I often say to people is ugly real estate grows in value too. The cheaper areas get lots of demand because affordability is what drives markets in many places. People don't buy where they don't buy in their dream location. They buy where they can afford to buy. And it's the cheaper areas that get the big, heavy demand. So, Blacktown, Penrith, Campbelltown, way down the far south west of the Sydney metro area, is about as humble as Sydney gets. Its long-term growth rate is 9.5% per year for the last 10 years. So, there's plenty of ammunition to respond to those concerns as well. The vast majority of investors who are in the market or trying to get into the market are chasing affordability because they just can't afford to spend $1 million on a property. So, they're looking for options where maybe they can spend $300,000 or $400,000 and get a pretty decent rental return, because the ideal investment is one that's going to show capital growth but also be positive cash flow, or at least cash flow neutral. And those possibilities do exist in many of our capital cities and lots of our regional areas. So some of the smaller capital cities like Perth and Brisbane and Adelaide and Darwin do have places where you can buy and those sorts of price ranges and locations that have the credentials for long-term capital growth as well as pretty good rental returns. And then right across regional Australia, there's great options as well, offering affordability, great rental yields and prospects for growth. You've got to choose your location well. It's not just a case of buying somewhere cheap. You've got to buy in places that have got the fundamental drivers of growth, such as strong, diverse economies creating jobs, big infrastructure spend, those sorts of things. If they're in place, you can have some confidence that where you're buying is going to show some good growth. And what we know to be true is that cheaper real estate can show excellent growth rates, 8-9% per year over time.
Yeah, absolutely. All right, that's really exciting for some of those viewers who thought maybe they missed the market. So anyone watching, as Terry said, research is king. So here at Alliance Corp, we provide a lot of that research, and with the assistance of Terry and all of his reports. And if you want to learn a little bit more about some of these regions, if you go to our website, you can download the reports. It's the National Cheapies with Prospects, and there's a city edition, and also there's a regional edition. So make sure you go to the website and check those reports out. Thank you so much for your time, Terry.
No worries at all. Always happy to talk about real estate.
Cool. Cheers.